Well, the fallout from the collapse of FTX continues. High-profile interviews by embattled founder and former CEO Sam Bankman-Fried have further debate on whether he knowingly commingled funds. He has said that he didn't. Well, we asked FTX investor and former spokesperson Kevin O'Leary what he thinks this morning. Take a listen.
By the time this is over and you ask me what Sam Bankman-Fried did, we'll know. It'll be totally transparent. And until then, I'm not joining the herd. I'm just waiting for the facts.
Well, since BlockFi filed for Chapter 11 bankruptcy protection last week, the question many are asking is, how widespread could the contagion be? Our next guest is Antoni Trenchev. He's the managing partner and co-founder of major crypto lender Nexo. We've also got Yahoo Finance's David Hollerith joining in on the conversation. It is great to have you on at a time when so many people have questions about this space. Now, you have, since the fallout of FTX, sort of put out this statement, Nexo has at least, to say very clearly that you don't have the exposure to FTX, you don't have the exposure to some of these other lenders that have fallen, and yet there are still questions about what exactly your balance sheet looks like. Yes, you've put out the proof of reserves, but they haven't really clarified what you account to be as assets. So, number one, can you clarify that, and how much of those assets actually include your own token, Nexo?
Well, we have been very transparent about that. Out of the total balance sheet, less than 10% are made up by our own native token. That's the Nexo token. You said proof of reserves. We've shown more than actually the proof of reserves, which right now is quite trendy. A lot of companies throwing out their addresses with lots of assets on it. Where we differ is that we have shed light into our liabilities, the other side of the equation, and we have gone the extra mile of showing that our assets exceed liabilities, which very few companies in the space have done. And I think that is one of the reasons that we are navigating through these challenging times better than most. And the underlying business model is the other reason. So for us, this is business unusual. What looked on from the outside as very comparable businesses had very different underpinnings. And, we have been standing the test of time.
Yeah, Antoni, Nexo for a long time has been very active, or I guess you would say is ahead of the game about doing proof of reserves. And I was curious, why stop short of actually disclosing a full balance sheet of showing the assets that are claimed? I bring that up because obviously a lot of what happened with FTX started with Alameda Research having a leaked balance sheet that showed that a lot of the assets they were claiming were FTX tokens. And you obviously pointed out that it's not your token that makes up the majority. But I'm just curious, why not more transparency?
Sure, we are striving for more transparency always. I think the major problem with FTX and Alameda was the fact that they have been very heavily borrowing against their own token. If you looked at the leaked balance sheet by Alameda, you will see that they have on their balance sheet more FTT than there is in circulating supply. So that is the problem, is the way that the fact that they have been borrowing against their own token, which we have not. In terms of transparency, we are different than an exchange, and we spend some time in trying to explain that. We have an exchange functionality, but we have a smart ordering routing system that sends out custom orders through various different exchanges, which is very different than a traditional exchange, which has its own order books, and ideally all the assets stay within those assets and they just addresses, and they are just matching the orders of the various clients. Our system, because we came in later into the game, we saw advantage elsewhere, creating this smart order routing system that gives you best price execution. And the byproduct of this is, for this to function well, you have to keep balances across different exchanges. And we also keep a lot of assets that are off-chain. So it is not so easy to do this Merkle tree type of audit on a company such as Nexo. That's why we did what I believe to be the next best thing, is to partner up with a third-party auditor who can see the full picture, vouch with their authority and reputation that our assets exceed liabilities. And we did that, last year when times were good, Bitcoin was flying from one record high to the next. We were preparing and future-proofing and safeguarding the enterprise against the very concepts and contagion like viruses that are spreading across the industry. So I think that we are one of the better examples for transparency in the blockchain space.
And Antoni, I want to ask you about these yields. Some of these are quite enviable, 10% on some of these stable coins. How are you able to provide such yields? And what does it mean then when you have a crypto winter and you're seeing the value of some of these tokens declining so quickly?
Well, we have to be completely honest here. These highest yields that are achievable and some people earn those interest rates are not necessarily representative of the entire book and asset mix, because to earn 10%, you have to have a certain amount of Nexo tokens. There are certain limits up to the amounts that can earn those interests. It's like, we have this internal joke that when you see a billboard of the new Mercedes S-Class and it says starting only $70,000 and they show you the S63 AMG, which has every possible feature and extras on it. Obviously, this particular model costs slightly more. So as an aggregate, the average client earns much smaller percentage yields. And the reason for that is that we, as a company, we've never relied on outside financing, short from our token sale in 2018. We have no outside financing, so no fancy VCs, which have given us money to, burn on customer acquisition. We bootstrapped the whole thing. We had a profitable and have a profitable business model to this day. So we try to make this economically sound in a way that we can continuously generate and yield and deliver good solutions for our clients.
Antoni, let me try to press on that point. And I want to pull up a tweet here from a Bitcoin analyst who I think kind of bottoms line the question for us. He says, ask yourself how Nexo is paying 10% on stable coins while DeFi yields are 1%, short duration U.S. treasuries are 4.5%. And then he goes on to say if the yield is greater than the risk-free market rate, they are by definition taking directional risk to chase said yield. How do you respond to that?
Well, just to reiterate the point, as an aggregate, all combined, our clients are not earning 10%. They're earning a much smaller percentage. And we are seeing opportunities in the market to generate that yield for our clients in a market neutral, safe way. We have disclosures in place which stipulate what we are doing with those assets. So what you get is what you signed up for. And the fact that, after this colossal fails, after redemptions, which have been sizable in the past 9 months, our systems are processing both deposits and withdrawals in real time without having to resort to any sort of bailouts, without having to resort to lock-ins, without having to resort to any sort of restriction on customer activity. I think it speaks volumes in and on itself about the sustainability of our business model, the stringent risk management policies that we have in place, and quite frankly, that we know what we're doing.
Yeah, and just 30 seconds here, but I know that Nexo came out as very strong in wanting to acquire companies this summer. Up to this point, it sounds like outside of an acquisition and a small stake in a U.S. bank, there hasn't really been any acquisitions that have sort of been the transaction has been completed. I was just curious, why hasn't Nexo acquired more companies as it has sort of set out to do since the summer?
Well, this is actually what differentiates you being a prudent business, that it takes time to audit companies, to see their financial states and to make the decision to acquire and not acquire them. The type of panicky acquisition of companies which happen to have outstanding credit lines to you, this is what is unsustainable. And the last one who was doing that was doing it for the sole purpose of the loans that he had received not being called back. So for him, and obviously I'm talking about Sam Bankman-Fried, FTX, and Alameda, it was a lack of choice. They had to acquire those companies in a frenzy, whereas for us this is by no means at all costs. We can do the due diligence, wait to see what assets can be retrieved from the companies such as Volt, where we are potentially looking to acquire it, and then make rational decisions that make business sense and deliver value both for the existing customers that are locked out outside their funds, and both for Nexo clients and us as investors.